Oh, there you go with stocks under heavy selling pressure today on fears that China's second largest property developer could be facing default. For more on what the implications could be for global markets, let's now bring in BlackRock's Rieder. He manages $2.7 trillion as CIO of BlackRock's Global Fixed Income. He's also head of the global allocation team. Good to see you.
Good to see you, too. I'm always on in less than stable times, but it's still good to be here.
And that's why we love to have you. There are a few voices who are better to hear from in times like this, given what you manage and where you work. How do you see this?
Listen, I think you've got to respect the news. And we've talked on the show. If you said to me, what are the risks in the world today? China's a big, the growth is slowing in the economy, the nature of the financial system and what happened today. You've got to respect this news. Listen, at the end of the day, one of the things that's happening in the markets is clearing prices is really hard. The conviction level in markets is low today, and so you get a piece of news like this, you have to factor it in. And, that being said, will we buy some stuff today? Yeah, I think you can add a little bit of paper if on this market pressure.
Oh, is that right? I mean, you haven't seen a big fallout in the high yield market from this news. Does that tell you that the market doesn't think this has a broader rollover or contagion effect?
Yeah, it's a great question, Scott. I mean, first of all, I find the equity market, the vol you're seeing, the volatility in individual names and equities in the actual index is much more dramatic than it's been in high yield. There's a couple of things at play. One, the demand for income is extraordinary, and that's not going away. So the depth of the bid for the high yield market is significant. And listen, I think people in the high yield market have been looking at Evergrande and some of the other names for a while now. I mean, the prices in Evergrande have been trading in the 20s cents on the dollar. So it's not like, whoo, this is a big piece of news for the credit markets in high yield. So I think that's been factored in there. And, we'll see. If the markets continue to have a hard time in equities, high yield will back up a bit. But like I said, this has been a name that's been talked about quite a bit in the credit markets.
Well, let's talk about that, though. What do you think this means for equities, if anything?
Listen, I mean, if you said to me, where are equities going? They are going higher. I mean, there's no doubt in my mind that equities are going higher. And, I think I said it on a call last week. We can still reprice. We can still retrace a few percent of the gain, but equities are going higher. I mean, there's no question in my mind when you look at the alternatives in the world. People have talked about what this means for growth. Listen, U.S. growth is still going to be durable. The demand side of growth, what's caused a slowdown in growth in the U.S., no doubt there's been some variant risk. But the primary factor that's been dulling some of the growth has been on the supply side. The demand continues to be robust. So I still think the equity market has got some upside, maybe some significant upside. The one thing I'll throw out there, and I know we talk about it, I know Pete talks about it, you can use convexity in your portfolio really effectively when the volatility levels were so low. You can run equities and still have some protection on because convexity is priced cheaply. Vol was priced so cheaply. It's obviously popping today, but I still think equities are going higher.